Let's break down why I took these sells below 30.75 here on Friday, April 4th, which as some of you may know was NFP day. Now on that day, I did use NFP to my advantage, and I also used the technicals to my advantage as well. So I'm going to break that down really quick for you guys. Now on this day, as you can see, let's zoom out first and let's take a look at the technicals first before we even pull up the NFP report. So as you can see, before we even took this trade, we already understood that gold from these all-time highs was starting to have very strong sellers coming into the market, and this intraday structure, as you can see here, started to be created, and you can see that it started to be more on the bearish side, right? Because you can see prices making these lows, highs, low, high, going against, for example, this sort of price action that you see here, that price is making highs, lows, highs, lows, right? So it made sense from an intraday perspective and from a technical perspective to be on the lookout for sells. Now, how did I use NFP to my advantage on this specific day? Because if you were to zoom in here, I'm going to circle this out right here, and we'll go on to the 1 minute, and we'll go and take a look at that specific time, and I'll show you that exactly at 8:30 in the morning, which is 8:30 Eastern hours, this was the candle that NFP was released at. So you can see a lot of volatility came in around that time, and literally after that candle and after that report came out, price started to be a lot more bearish on these lower time frames. But again, let me pull up the NFP report and let me explain myself how I use this to my advantage. Now, NFP, unemployment rate, and the hourly earnings. This is the main reports that I was paying attention to this morning. The first one being NFP. You can see that the consensus and the forecast was at 100K and 135,000, and even the previous report came out at 117. Now, what this report is basically telling us is that the labor market in the US was a lot healthier than the economists and market investors were investing. Now, because we're talking about the US economy here, we have to look at this as an optimistic report for the US, right? So when we go back and we take a look at a pair like gold, which is gold against the dollar, you'll realize that at that moment, having that fundamental advantage was going to allow you to understand, okay, well, if this is going to be an optimistic report, that could bring more buyers into the dollar and possibly bring more sellers onto gold, right? That's usually how these correlations work. But you're not supposed to just immediately sell because you still need your technical advantage. Now, what was the technical advantage that I was looking for? I wanted to see price trading below 30.75, and the game plan was I was either going to go for a breakout or I was going to go for a break and retest. So on this day, I actually took two trades. I took the breakout, which was a break even trade, and I'll show you guys the trade here. And then I also took the retest, which I'll also show you guys. So again, after the NFP report came out, you can see on the lower time frames, price was clearly trending more bearish. So I had these levels marked off. I waited for the initial breakout to come. I saw price break out. Price did a retest, which if we zoom out, you do see a lot of reactions at this area right here. So this is what I call like reaction points or significant price points. So after the breakout came, price literally broke out, came and retested that exact point. After I saw that that point was retesting, after I saw that price was retesting and rejecting this area, I knew that I wanted to enter trades below that area. So you can see after price literally got to that zone, slightly rejected, made a minor pullback, and then started to break out. That was my initial trade. Now the stop loss that I took once I took that breakout, which was literally on this candle right here that you guys can see, I put my stop loss above these highs, which was about 60 pips. That goes to show the amount of volume and volatility that was in the market, because literally 2 3 candles right here were worth more than 50 pips, right? So I thought, okay, I need to obviously have a positive risk to reward. What would be a positive risk to reward if I'm risking about 60 pips? That's going to be about 120 pips. So I did size down on my positions. I usually go a lot heavier on the lot sizes that I put here. But since there was that amount of volatility, the stop loss was so big, I usually use about maybe 30 to 40 pips max. I adapted to the current conditions. I knew that I needed a bigger stop loss. I knew I needed a bigger take profit. So this was my 1 to 2, about 120 pips. You can see price broke out. It went to about a 1 to 1, literally just a 1 to 1, like basically perfectly a 1 to 1. It started to also break these previous lows, which I have marked off here. This is when I decided to go ahead and actually put my position at break even, which unfortunately for that position, I got taken out quickly just on this candle right here. This candle that engulfed back into this area. I was already break even. I got taken out, and it is what it is. I wasn't really planning on taking any trades because I did want to initially only go for the breakout or the break and retest. And since price literally was just pushing back up into this area, there was signs of more buyers coming in at that time. I decided, okay, well, I'm not gonna go for the breakout again. I would have to wait for price to break those lows and then give me a retest. So again, this is the important part about always having a plan. You can see that after I made that scenario, price literally did just that. Price ended up going close to this previous reaction point. We ended up breaking those lows, as you can see here. So we had a nice breakout, and it actually went to my exact take profit. So you can see that the initial take profit, again, off of this breakout, I was risking about 60 pips. Let's do that one more time. And so it was about a 1 to 2. Price literally broke out, and just in a few minutes, price moved about 130 to 140 pips. So at that point, I understood, okay, we're still respecting our technical bias. Fundamentals are still the same. We're going to be more on the bearish side because right now the dollar, which I'll show you guys now, excuse me, the dollar at that time was starting to show signs of more buyers coming in. So again, using that correlation to my advantage, I understood there was more buying pressure in the dollar, more selling pressure at that moment inside of gold. So I knew, okay, price already broke these lows. Let me wait for a retest. You can see price came to that exact price point and started to reject. After I saw that this candle rejected, I literally followed my game plan, which I said I'm going to go in for the retest. I saw this candle closing bearish, so I saw that price was rejecting, that there was sellers at this area. As soon as price came back to that zone, I took my trade. I believe it was around in this area right here. Same exact stop loss. It was about 60 pips, which was above these highs and above these highs right here. Same exact take profit. I was looking for a 1 to 2, which was a little bit smaller than that. I knew I was looking for about 120 pips on this day. So it was about 120 pips that I was looking for, basically a retest of this low point right here. And you can see that trade played out quite well. I had very little drawdown. So yeah, so I did end up going about 30 pips in drawdown, more or less. Wasn't too crazy. I knew I had to size down on that position, so I knew I was fine. My stop loss, that was it. I accepted my risk. I knew what I was doing this day. I knew that, okay, my first breakout, that got taken out break even. The break and retest, if price takes me out, I'm done for the day, and it is what it is. But luckily, price did end up going straight in my favor, so that paid quite well. So now this is a good example of using the technicals and using the fundamentals to your advantage. Now, it's not always going to look this perfect, but that's why I always tell people you should be able to combine the technicals with the fundamentals. And if you can have both of them in your favor, then you're going to have a much stronger edge on the market, which at the end is only going to help you make better trading decisions. So hopefully this video was beneficial for you guys, and hopefully this was able to help you guys have an understanding of how you can use those fundamentals to your advantage. All right, guys? So take care, everybody, and I appreciate you guys, as always, for taking your time to watch this video. Take care.